Welcome back to Business Week on Arise News. The global venture capital market saw a combined 37,000 transactions worth a combined $345 billion in 2023. That was a 27% decline in number and 35% drop in the value of deals. What is accounting for this rout in the global venture capital market? The amount invested in deals hasn't been as low since 2019, when the total global venture capital transaction value was $333 billion. Well, today I'm joined in the studio to help us understand how Nigerian startups are competing for capital. First is Solebo, who is the managing director of the ARM Labs Lagos Techstars Accelerator, which is investing in early stage startup space in Africa. Oyi was previously the co-founder and CEO of Move Me Back, a Google-funded and London Stock Exchange recognized elite community platform. She's previously worked for Goldman Sachs and Roland Berger Strategy Consultants. Also joining me is Bright-Faniro-Dada, partner at Brega and European Venture Capital Fund, which closed its first fund in 2015 and now has over 500 million euros in assets under management and more than 100 portfolio companies. She's also a governing council member of the FinTech Association of Nigeria and was once managing director at Endeavor Nigeria, as well as director of programs at the Lagos State Employment Trust Fund. Great to have you both on the show with me today, and Happy New Year to you.
Happy New Year.
So I'm going to start with you, Tosin, to sort of understand just how much was raised over the last year. You know, there's this talk that the market has sort of slowed down. Investors are now a bit more risk averse. What's going on? What's the picture like?
First of all, thank you so much for having me. 2023 was a challenging year, and not just for African startups or VCs, but the global market in general. And in 2023, African startups raised $3.4 billion. This is probably the lowest funding since 2020.
Okay.
In 2020, we raised $2.1 billion. In 2021, we raised over $4 billion. And then we started to see a number of mega rounds. We define mega rounds as rounds over $50 million.
Okay.
For
a single deal?
For a single deal,
yeah,
exactly.
Okay.
In 2022, we raised over $5 billion. If you include debt, it goes up to like 6.5 billion. So 2023 was definitely a downsized round for us. But I think what's important is to know that from the beginning of 2023, we knew that VC funding was going to decrease. And we knew this because of the high interest rate. We saw a rise in the interest rates in the US market. And I think we actually started noticing this at the tail end of 2022. We started to see the decline in funding. But I think what's important to note in last year's funding round is the fact that for the first time, just looking at the regions and the different sectors, in terms of the region, for the first time, North Africa led the way with over $1 billion.
What countries in North Africa?
Tunisia. Basically because of InstaDeep. So the acquisition of InstaDeep that accounted for $680 million. I think it's also interesting to look at the sectors as well. FinTech, obviously, is still king, accounting for 45% of funding. But we started to see sectors like clean tech and energy take a big chunk of the pie. Yeah. And then obviously you have the regulars, logistics, healthcare, etc.
Interesting. We'll come to fintech later because I sing a lot in the news about all these fintech startups going boom. So I want to come to you, Oyi. You know, you run a sort of accelerator type of model, and you have a lot of bullish appetite for the African market, just in terms of the breadth of entrepreneurs and what you're doing. And what opportunities are you seeing that others seem to have shied away from? You know, how are you kind of gauging your sentiment for this market?
Sure. So last year, Techstars was the most active investor in technology startups in Africa, and that was against this backdrop of declining VC funding. And I think ultimately the investment case for Africa still holds. We still have this young, growing population where by 2050, 1/4 of those of working age are going to be living on the African continent. We still have this nascent, but this emerging middle class, where over the last 3 decades, we have seen a tripling in the number of middle class. We still have internet penetration rising and digital access rising. So there still, in my opinion, is this amazing opportunity for investing on the African continent.
So, you know, sometimes the opportunity doesn't always translate into the actual investment. So there clearly, I mean, you mentioned interest rates and a few other sort of headwinds that happen. And, you know, I know we don't have time to sort of dissect in detail, but I've been seeing a lot of articles on startups failing, and many of them have been in the fintech space. you wouldn't be in this space if you weren't bullish and optimistic. So
Yeah.
clearly you're not, you're not sort of bearish about the market. But what are some of the challenges that are rising to the fore? And why so many startups, especially in the payments and fintech space, falling off the radar? Who wants to take that? Whoever would like to, perhaps you want to start?
Yeah, sure, I can start. So as Sosi mentioned, first of all, it's been a really challenging macroeconomic environment. We barely had time to breathe after COVID before we were hit with this geopolitical crisis in Russia, Ukraine, leading to inflation, interest rates. And in a rising interest rate environment, investors are less inclined to invest in risky asset classes, which startups ultimately are, and more inclined to invest in low-risk asset classes like fixed income, where they're going to get a fixed return. So one of the reasons we saw this decline, or this shutting down of a lot of startups, is that many of them depended on follow-on funding for their growth and weren't able to access that follow-on funding. Now that perhaps then begs the question of, perhaps, were they growing in an unsustainable way? Was there perhaps internal pressure, or maybe pressure from the VC community for them to grow at any costs? So, for example, I did hear the phrase that, if you're a startup and you're not spending more than you're making every month, then you're not aggressive enough in your projections.
Really?
So I think, yes.
That actually sounds counterintuitive, right?
So it really is the idea of being really aggressive with that. We also, if you look at the fintech companies that did fail, a few of them were in crypto, and crypto was a buzzword, but we saw the collapse of FTX, we saw more regulation, and that, I think, led for challenging times in a few of the
but there were a few of them that were also in Africa and Nigeria, and they weren't all in crypto. And Tosi, I once heard someone say that part of the reason many startups are failing may be because they're not selling products that consumers want. How do you assess what's happening?
I think, to Owen's point, I think it's simple. They run out of cash.
Okay.
That's just a simple answer. I think startups raise funding, and then they think they can continue raising follow-on rounds. But if they're unable to raise that follow-on round, I'll give you an example. If a startup's burn is $30,000 a month, if you have $100,000 in the bank, if you don't raise money and you continue to burn at that rate, you will die in 3.5 months.
Yes.
There are two things. It's either you scale back operations, or you raise a bridge round from your current investors, or you go look for new investors.
And scaling back operations may mean letting go of people as well.
Layoffs. Yeah. And we saw a lot of layoffs in 2023, and that's exactly what they were doing. They're trying to be lean. So I think startups, like Onyin said, were growing aggressively. And the thesis then was growth at all costs. Grow.
And even entering new markets.
And
going to Africa,
new markets. But now investors are saying, we want to see revenue. It's hard for us. And I tell entrepreneurs this all the time. It's twice as hard for VCs to raise funding. And I say this because as an entrepreneur, you have a product of value, right? And you can easily say, I'm selling this product of value, I think customers will pay for it. As a VC fund, I'm saying to investors, to limited partners, I have the ability to bet on tomorrow's winners.
Right.
That's it.
So you have a crystal ball.
I have a crystal ball. I have the ability to bet. It's much, much harder. And so because of this, VCs are cautious. And so we want to see a clear path to profitability.
Yeah.
We want to see sustainable growth. We want to see sustainable business models. We want to see revenue. So it's not growth at all costs anymore.
Yeah. Interesting. So, you both work with entrepreneurs, and I think a lot of the work you do involves rolling up your sleeves, sort of understanding what's going on with their models and operations. So some of the entrepreneurs you're currently working with, what are the types of business models we're looking at? And what is your kind of selection criteria to determine who would be in a Techstar accelerator?
Sure. So our investment thesis for this accelerator is that we were looking for the best companies across the African continent who were using or are using technology, data, and intelligence to serve a customer that is growing in size, in youth, in digital access, and in income. So we ended up investing in fintech, as well as e-commerce, logistics, health, renewable energy, and the future of work. And when the lens through which I use when I'm screening these startups is I look at 4 key things. I look at team, the market, traction, and the product itself. So team, at this early stage of investing, is by far the most important indicator of whether or not a startup will succeed. So I'm looking for teams that are uniquely positioned to succeed. Perhaps they have domain expertise, or perhaps they have unique insights into the problem that they're solving, or the customer that they're dealing with. Also looking for founders that are incredibly resilient, because it's tough out there. Founders with an execution bias, and founders who respect feedback, both from customers, but also from mentors. And then in terms of markets, we're looking for markets that are big, markets that are growing, and where the timing makes sense for that market.
And which markets excite you right now in Africa?
Sure.
Apart from Nigeria. I know you're going to say Nigeria is one of them.
So I'm relatively agnostic in terms of which markets I go to. It really does depend on the opportunity that the startup is solving. So in this year, I invested in 9 Nigerian companies, but also 2 Ghanaian companies, and 1 focused on East Africa.
Okay. And so, Oyi, I want to ask you about the VC side, the fundraising side. We talked a bit about the entrepreneurs. What are some of the trends we're seeing about, how are your limited partners, institutional investors asking about opportunities now? What are they interested in? How is that constraining what you're able to do?
Okay, Tosin.
Tosin, sorry.
No, that's okay. So I think investors understand that Africa is truly the last growth frontier in terms of digital. And I would start with the digital opportunity. Our digital economy today is valued at $115 billion. And that number...
For the whole continent?
Yeah, for the whole continent.
Okay.
And that number is expected to grow 6 times by 2050 to about $712 billion. And if we look at what's driving that number, it's 3 things. Oyi mentioned it. Young population. By 2050, we will have 1/3 of the youngest population in the world. The second is the growing middle class. And the third is just the rise in consumer spend. And obviously, when consumer spend rises, that means that there's more consumption of goods and services, which by extension means higher economic activity and also higher GDP growth. So investors do understand that, this is the last growth frontier, especially investors that missed out on Latin America and Southeast Asia and don't want to miss out on Africa. But I think what's also important to note is the fact that in Africa, we have real challenges. It's day one for us. We're still trying to solve the basics.
Yeah.
Sometimes it's just distribution.
Yeah.
At the end of the day.
Yeah.
And there's so many sectors that are ready to be disrupted. And our entrepreneurs are rising to that challenge. They're extremely resilient. They're building in an economy, in a market that pretty much has low to zero infrastructure, right? And so the opportunity is there. And the opportunity exists obviously in fintechs.
Yeah.
And we've seen it. We've seen the traction. We've seen fintech companies address gaps in traditional banking, financial services with solutions like mobile money, digital payments, and now embedded finance, which is also gaining traction. Healthcare is another exciting sector. Logistics would also be important. I always say that, look, if we're able to figure out payments, fintech, payments, logistics, and commerce, we can leapfrog Africa.
Absolutely. And, it's interesting you mentioned logistics, because everything we've been talking about, even our macros inflation, a lot of our inflation is supply side driven, and that requires transportation, all these other things.
Housing.
And a lot of this has to be digitally enabled. But there's a question I have for both of you, really, is that speaking to a lot of DFIs, institutional investors, one of the reasons some in the market have cited for the failures is because much of the money is coming from overseas.
Yeah.
And we don't have a huge pool of local capital as limited partners going into these funds. I mean, based on the work you both do and whoever wants to take this, how do you see the role of local capital, local VCs, local LPs coming in to help catalyze the work you do? Oyi?
Yeah, sure.
Sure.
Happy to.
I'll go after you.
No worries. Well, so I think around 60% of funding in startups ultimately comes from the US. And I think that there is a part to play, but I think the question is who is making that investment decision? Is it someone that understands the market, understands the kind of problems that are being solved, or is it being made overseas? And a lot of the accusation as to why some of these startups failed is because direct capital was coming from overseas, investing in markets they didn't understand and businesses that they didn't understand. Now that's, people may argue against that, but that is one of the accusations that has been made. Now, if it's LP money going into local funds, then I'm in great support of that, because ultimately it's still the end local investor that's making that decision. And we have actually seen some great success stories last year. So although we speak a lot about the negativity in terms of macroeconomics and geopolitics and the reduction in VC funding, we did see some impressive closures of local VCs. So the likes of Partech, Novastar, Norskin 22, Founders Factory, that have raised local funds to invest in local startups, where ultimately the partners in those funds have local market context to make those decisions.
Yeah. And I think that's a really important point you make about, the final decision maker, regardless of where the money is being initially sourced from. So Tosin, I'd like to get your take on that.
I think the VC landscape is evolving, and it's exciting to see. It really warms my heart. And I think you're seeing a lot of early stage VC funds, local early stage VC funds, raise money locally. Good example is Fresh Check Africa, Voltron. They're all raising money from local LPs. And I think it's exciting to also see now that entrepreneurs can actually raise their pre-seed round and perhaps a small seed round with local VCs, with local early stage funds. And I think if you take it a step further, you also have local funds raising money from local and
limited partners,
limited
local
partners,
investors.
So raising money from local limited partners and global limited partners as well.
Yeah.
A good example is the Ventures platform. They raise money from local investors and foreign investors as well. And then if you think about like Partech, Norskin, and Novastar, they're global funds with Africa dedicated funds. I think that's what is super important, because what happens is, and we call them tourist investors, investors that in VCs...
Briefcase investors. Just come with a bag.
VCs that invest from their global pool. What happens is when Africa is no longer hot, they're not interested.
Or when there's a major catastrophic global event and they're consolidating, Africa is the first to be struck off.
They focus on their primary markets.
Absolutely.
And so it's important that we have Africa dedicated funds, which is Briga as well, where I work as well. So it's
excellent stuff. So we're almost running out of time, but there's two quick things I want to talk about: returns on investments. Given that there was this kind of slump in capital last year, did it also impact returns? Is it 2 times the money invested, 3 times, 10x? And is it over 5 years or 7 years? Help us understand a bit of those trends. And then I guess finally from both of you, what you're expecting for 2024. I'll start with you, Oni.
Sure. So I think it's too early to say. Ultimately, when you are making a startup investment, you have to think long term. You have to be deploying patient capital, especially in this market. So typically, it's a 7-8 year return that we're looking at for exits. Typically, that is the time frame we use for Techstars companies as well. So I think it is too early for us to say how that will be impacted. But in terms of my expectations for 2024, I, number one, do expect more LP money to be coming into the African continent. If you look at research from the likes of the African Venture Capital and Private Equity Association, they do predict that LPs will be allocating more money to African private capital. So that's great news. Secondly, I do expect that more VCs will be able to close their funds because of this increase in LP funding. But whether or not that means there'll be more deployment of capital, I think is still yet to be seen, because ultimately they're still looking for good deals. I think that VCs will continue to also be really stringent about how we decide on who we actually invest in.
Fantastic. Thank you, Tosin. What about you? What's your outlook?
So very similar to Oyi, I think we're going to see some amazing companies come out of this time, because entrepreneurs will be forced to be resilient, to be capital efficient, to be lean, and to actually build sustainable business models. I think VCs will deploy, because once you raise, you have to deploy.
Yes.
You have 5 years to deploy. And it's not a good look to your limited partners if you're not deploying, so it's why do we give you money? But I think VCs will be cautious and deploy to companies that will be sustainable, companies with a clear path to profitability, and companies that would grow sustainably.
Fantastic. Thank you so much. And hopefully the stars align, you know. I'm seeing bigger check sizes as well, $1 million, $2 million, even with seeds, you know. So interesting times in the market. Thanks for joining me on the show today, ladies. I've been talking to Solebo, MD of Techstars and partner at Bright-Faniro-Dada on the VC outlook. Hopefully you're bullish too, because I am. Well, that's all we have time for on Business Week today. Let's continue the conversation online. Do have a lovely weekend ahead. I'm Rolake Akinkunbe-Filani. Bye for now.